Okay, welcome to the FantasyLabs podcast. This is Bryan, your host, as always. We've done this a couple weeks in a row now. I said I wanted to do this more regularly and have a 20, 30-minute podcast on specific subjects and things that we could give practical ideas on for your DFS research and process. And I think we've done that the past couple of weeks and want to continue this week. So the subject that we are going to discuss this week is how the stock market and economic principles in general apply to DFS and DFS strategy in general. And I thought there's no better guest, or is he a guest, or just a FantasyLabs guy that's just always around to have than my fellow editor and buddy Matthew Freedman. Matt, what's going on, dude?
Thanks for having me. I should say I'm very aware that there are better guests, just none of them were available. So I'm filling in for all of them.
I asked at least 20 to 30 people, and they all said no. And I was just like, God, who can I get? Matt cannot say no.
Matt has nothing else that he's doing tonight, and he'll jump on a podcast.
Exactly. It actually works out because you've written about this a lot. You have your series, The Labyrinthian. But one thing you write about often is economic in stock stock market principles. So it's one thing that I wanted to discuss. It's always something I've been interested in, and something that in our conversations you've had a lot of strong opinions on, just from talking to you, where even your first article on the subject was that playing DFS is not like the stock market. And you've been very vocal in that is not a particularly apt analogy between the two, and that you think that there are some better ways that we can discuss DFS outside of the stock market, maybe in different markets, and you've discussed that in your articles. But it's just been a theme and a trend of your articles. So I thought enough with the writing. Let's talk it out. Let's talk economics. So we'll start there. Why is the stock market, and this is a popular subject because I think it's a very natural progression in thinking. DFS is players have salaries. There's a salary cap. It is a daily sport in same sort of way that you have daily stock markets and trading, and you're really cost aware and stuff like that, and the value of stocks when you want to buy low and sell high and that sort of thing. And everyone makes that analogy between the two, but you're more hesitant. So we'll start with that initial article, and I want to get your thoughts. Why is it not maybe necessarily as great of an analogy as we think?
Sure. So I think the analogy is something that kind of remains in DFS because it's a holdover from seasonal or dynasty fantasy sports, where I think the analogy makes much more sense. So when you have the capability to trade, right, just like you do in the stock market, timing is important in season long, in dynasty, right? So like that is a very crucial thing. So think about how you make money in the stock market. The way you make money is basically by timing the market. You buy and then you sell. And if it's a stock that actually gives a dividend, then you actually get some money from the company. But that is not really how people make money in the stock market. They buy and then the price goes up and then they sell, right? Mm-hmm. That analogy doesn't, that mechanism for profiting doesn't really work if you look at DFS, because the way you sort of get your investment back in DFS is if you invest in something and then you get a certain amount of production out of it. Sure. Like a car or something, right? And that's ultimately the analogy that I fixed on. If you buy a car, you want to get a certain number of miles out of the car. And then once you reach that threshold for production, you have gotten value. That's actually very similar. So the things that are good about the stock market analogy, like analyzing a company, being able to look at trends, profits, things like that, you can still find all of those in other types of markets. Like you can find those in commodity markets. You can even find those in like rare painting markets, right? Like all of those different things exist. It's just that when people think about investing, the main market they think about is the stock market. But because it's a paper market instead of like a real market, it has nothing to do with like the physical attributes, like the production attributes that we think of when we look at sports.
So is it a timing thing? And maybe it's just a misuse of the definition of production. Because, I think what you're saying is that, we're looking at production, especially if maybe the stock market applies to season long or whatever, sort of fantasy different than daily, is that we're getting a prolonged benefit from our what we have purchased, our good that we have purchased. We buy it low and then we get production out of it over an extended period of time. Whereas daily fantasy, we don't really get that. Like you get it a game and an MLB DFS, maybe for example, or the NFL or whatever. You're getting a very volatile sample where you're expecting your production. Is that sort of what goes into it? Is that our production or idea of that term is maybe a little misapplied because it's just a day. Like you get 4 quarters in NFL to get production out of something that you have invested in, and that's not really necessarily a good example of production.
Yeah, so that's part of it. I think the factor is that the timing thing is there, whether it's a truncated sample of just a day that we get in DFS, or if it's like a sample of a season, and within that sample, let's say that you draft like, Des Bryant, and you're looking maybe like to flip him at a point in the season where you can get maybe more from him than you would have been able to get if you had traded him near the beginning of the season. So like you have more time there and you get a small profit by being able to like buy him here and then selling him here. But really where you get something out of him is in that production that he gives you on a weekly basis, like the fantasy points that he actually like produces for you. If we were to look at the stock market, that would be like the dividend that a company pays you, right? And that's not how you make your money in the stock market. Like stock market is very much about where you can buy, where you can sell, what the company is worth, and what the market is going to think the company is worth. In NFL or any of the other sports out there, what is more important when you're drafting a guy isn't what you're going to be able to get for him when you trade him 6 weeks later. It's like the production, the inherent value that he actually has, like the production he's going to be able to give you on the field within a certain period of time, whether that's like a day or a season or maybe the entire length of his career, right? It's just a very different way of evaluating assets. One is thinking like, what can I get for this guy later? And one is thinking, what can I get out of this guy now?
Sure. Yeah, and maybe that's something that people don't understand is, when you're buying something low, it's not like there's a certain understanding that they're going to be high eventually, and you're going to, and it's not just about buying low and selling high, but there's also that middle ground between the two of those things where you are reaping the actual benefits of that going from low to selling high, and you don't necessarily get that in DFS. So like you mentioned earlier, there is a perhaps more apt analogy, which is the car market. And I'm curious, you looked at eventually, like initially in your Labyrinthian series, why is that a better analogy than the stock market?
Sure. So it has all of the same kind of like investable qualities. Like whenever you look at a car, you are looking at some of the same things that you look at when you want to invest in a company. But you also look at all of these other things that have to do with the physical attributes, right? And because like all of these sports, DFS, it's based on like a real sport, like real bodies moving in time with each other. You don't have that physical dynamic when you're looking at companies, right? But if you're going to look at a car, you want to know like how many miles does it have on it? Like how old is it? Like what size? Like what's the model? Like where was it built? Like all of these different things, right? And when you look at players, I know at FantasyLabs that we don't have all of these things built into our models, but we're starting to get some of them in the models, like in MLB. Now we have the data that's like, how far does this guy hit the ball, right? Not just like what's his WOBA, but like how far does he hit the ball? What's the exit velocity? Those physical things I think are actually very undervalued. But I think they're really important to helping you gain like a nuanced sense of what is happening within the field of play. I think the best DFS players are the people who are are good at analyzing numbers, but they also have an understanding of the game itself and thinking about how all of the bodies in the field of play like work in tandem. And so I think that's what you get from the car analogy. It brings you back to the physicality of the sport. I think if you ignore the physicality, you're missing a huge component that could give you an edge when you're competing.
Do you think there's more that we can explore in the NFL area? I know that you put forth a lot of your past and a lot of your writing is for NFL. You're right. We've put a lot of our analysis and we have new stats for our MLB at FantasyLabs about these advanced statistics with hard hit rates and distance and batted ball stats, and all of that goes into the physicality nature of MLB. And I think we'll have some of that in NBA as well. And NBA is sort of doing that in general with their sport VU stats and just like how fast people move, rim protection, and the more physical stats as opposed to just like how many points this guy scores, which isn't really a physical sort of thing. Do you think there's more NFL stuff like that coming?
Yeah. So
is it combine stuff?
So I think there are two different ways. One would be looking at how bodies actually move when they're playing football. And so, a site like Pro Football Focus, they would be doing this the manual way, right? And they're great at it. They're great at breaking down film in that way. There's also GPS data that's coming, right? Okay. The NFL has been tracking players for 2 years with chips in their shoulder pads and stuff like that, right? Like that data is coming. And so I think the teams that are able to leverage all of that data look for trends. And so at this point, you're not breaking down film, you're breaking down a database, right? Like all of that information, like that is really exciting. That is going to be the revolution in kind of movement science being brought to the NFL, right? So that's in terms of just like what happens on the field. And there's the whole other aspect of, as you mentioned, the combine, like what can these guys do physically on their own, like the physical specimen, right? Like if a guy is 208 pounds and 6'2", like that means something. That's a small edge for a wide receiver in comparison to a guy who's 5'10" and 179 pounds. Like it just is. Like he tends to get more targets in the red zone. He tends to convert those targets more efficiently, right? So there are these physical factors that I think at some point will help people if you can incorporate them into your models in a way that weights them appropriately, right? Like I don't want to say that like physicality is everything because you have a guy like Antonio Brown who is not big and was not very dynamic in his like pre-draft workouts, right? It's just, but he was a great football player. So these physical attributes aren't everything, but they can definitely add an edge.
Do you think part of it is also luck stats? I mean, we have a lot of luck stats in MLB, and part of it is these advanced stats that we've been able to add that are physical attributes. We can say a guy has not scored many fantasy points in the last 15 days, but he has been crushing the ball, and a lot of that's just been bad luck. I mean, it doesn't seem like we have a lot of luck stats in the NFL where we can say, this guy has been like creating a lot of separation and just been really unlucky with like balls thrown towards him. I'm not exactly sure how you analyze that, but it just seems like there's a lot of luck potential factors that we can measure, or even just like analyzing how injured a guy is. Like if Des Bryant runs on average 20 miles an hour at his top speed and all of a sudden he's down to 17 miles an hour, then all of a sudden we can say, wow, all right, this guy's actually injured as opposed to just playing badly. So it's just like this is really important here.
Right, or all those instances where you can look and say, all right, if a wide receiver has his cornerback beaten by 3 yards, like a certain percentage of the time, he should have a completion, right? Yeah. And like if the quarterback is just overthrowing him or underthrowing him, like you could look at that and say like, okay, well this should normalize, or maybe it's like, hey, it's just not going to happen for him because his quarterback sucks. Right? But I think even just having that spatial knowledge would help in evaluating those circumstances.
Yeah, that makes sense. Okay, let's get back into our into our economics slash stock market principles. Well, I guess you're going to with all this physicality. Are you just studying the ESPN the Body magazine and just looking at bodies and seeing what you can analyze from there?
Yeah, I look at a lot of bodies. That's how I spend most of my day.
Just looking at bodies. Yeah.
Just, people walk by, I just stare at them.
The best DFS players, I think, just more analyze bodies of people than anything.
Mm-hmm. Yeah. I mean, a lot of my day spent looking in the mirror.
It's fair. I mean, how can anyone blame you for that?
Well, I feel like you need a frame of reference. Like if you're going to be analyzing someone else, first you just know, what perfection looks like. No.
Yeah, Des Bryant's okay. How does he compare to Matt Freedman? That's the question.
Not as fast. A little bit taller.
I like it. All right, let's move on, Matt, here. So one thing that you've written about quite often, actually, you've written about this in several articles, is the inverted yield curve. For people who may not follow economics or have not taken it in college or just don't enjoy that sort of thing, I'm not sure why you're listening to this podcast at this point. What is the inverted yield curve and why is it important to us DFS players?
Right. So let's say if you were lending money to someone in like the normal world, if you lend them money for a small amount of time, you get a smaller amount of interest. And if you lend them money for a longer amount of time, the amount of interest that you get back, like the percentage basis that you get back is higher.
It's like a mortgage.
Yeah, exactly. That's just like how the world normally functions. Mm-hmm. Like when things are going well with the world, that is how interest rates work. Mm-hmm. There are a few times when the economy is so screwed up and someone needs a short-term loan so badly that the normal relationship there between like time and interest rates gets flipped. And when that happens, that's the sign that your economy is probably about to crash, right? So basically for the last 40, 45 years, any time that's happened in the United States, like it's been followed by a recession within about a year. And so it's just this marker, this economic marker that people kind of keep an eye on. It's sort of like the canary in the coal mine. If you see an inverted yield curve, like you might want to start taking steps with your portfolio, right? Yeah. So the idea of thinking of time, the production yield that you should get from assets, like I thought that there might be a way of applying that to DFS. And so basically what I started doing was looking at different trends in our trends tool at FantasyLabs and trying to think about kind of discrepancy between what we would think of in terms of like time and production. So for instance, for a lot of players in different DFS sports, if you have a guy whose long-term production has been trending down, but his, like in the short term, he has seen a hike in salary, right? Like that's sort of like a divergence of what you would normally expect from like a production time standpoint. It's not exactly the same thing as an inverted yield curve, but like it works for our purposes. And the thing is, like where it really works is that those guys tend to crash, right? Mm-hmm. Like if you see that, it's normally not a good thing. And what I actually love about this is there could be legitimate instances in which guys do have salary hikes. So for instance, like in an MLB slate, a guy could have a higher than expected salary because he's in a great park and he's going against a horrible pitcher, right? There could be like a number of these things that you could point to for reasons why he's justified at his salary, why he probably could return value, and like why you should roster him. The thing is, like if we're kind of like talking about like Bayesian priors, like the strength of the year of subpar production outweighs like the probability that a guy will take advantage of the one good matchup that he has that justifies his hike in salary, right? So if you see a guy who's trending downward in production over a longer period of time, but in the short term, he's got a price hike, in general, those are just players to stay away from.
So it's almost just the idea of take larger samples over small samples?
Yeah, I mean that's part of it, but it's also this kind of like divergence of like the amount of money that you have to pay and like what you would expect over the short term
Sure.
versus like the amount of production that you are getting for a longer term period of time.
So it's maybe a situation like at Coors Field, perhaps, where like a guy who has really, really, really been struggling and been on the downward trend, all of a sudden he gets a price hike just solely because he is playing in Coors Field. That doesn't necessarily mean he's playing any better, or it doesn't mean that he's a better batter all of a sudden. It just sort of means that he's in a better spot, and that's maybe a red flag for you.
Yeah, like that's a really good instance to point to, right? Like if a guy is hitting the ball really crappily, like it doesn't really matter if he's playing at Coors, the odds are that he's still going to continue to hit the ball really crappily. You know what I mean? Like if a guy is hitting like the ball like 175 feet, like on average, like 175 feet at Coors is still basically 175 feet. You know what I mean? Like there's only so much that good circumstances can do for a guy who has shown over a longer period of time that he is just not the player that he should be in comparison to the salary that he has had during that whole period of time.
Interesting. You mentioned the Bayesian prior. We didn't have this on our in our pre-pod talk or the outline, but I'm curious to ask: is you had been writing about this for the NBA about the Bayesian prior is more important to analyze the Golden State Warriors than the Cleveland Cavaliers, and then they sort of just took your analysis.
Where did that go?
And just shoved it somewhere.
Yeah.
And I haven't asked you about this, so perfect time live on a pod. Can I get your analysis on this?
Of the NBA Finals?
Yeah.
I mean, no, you cannot get my analysis because I'm not the person who should be giving that analysis clearly. Sure. But one of the things that I think is so fascinating about that situation and about situations like that when it's still like a small sample size, like 7 games, still relatively small sample size, but it's a very unrepresentative sample size, and that it's not like spread across like a population of like all of the NBA teams. It's hyper focused on just like this one. It's almost like Groundhog Day, just like this one matchup repeated over and over again. And I think in situations like that, like what has happened, like the odds entering the series are maybe slightly less relevant because you have the ability to adapt if you're one of these teams. You have, like game theory becomes more important than just kind of like pure statistical probability. So, having said that, I think it's like even entering that game 7, the Warriors were still, like favored to win that game, still favored to win the series. Now this is a statistic that I think is almost meaningless, but in game 7s, the team that had the MVP had won the last 18. You know what I mean? Like it's a situation where I think what Cleveland did, it's not that it's entirely like unprecedented.
It's the outlier for sure.
Yeah. It's just something that you would not anticipate to happen.
Yeah, no, for sure. It was definitely the outlier. I mean, watching it as an analytical guy, literally up until the final buzzer, really until Mo Spates was taking the fadeaway 3 at the end, which is if Mo Spates is taking your fadeaway 3 to try to cut it to 1 within 3 seconds, you're in trouble because it's Mo Spates. I honestly didn't think Cleveland was going to win. At any point in the series, I didn't think they were going to win until that point, which is just sort of shows you like the fact that my mind has been so brainwashed by the Bayesian prior, and just like you go sort of going in knowing that Golden State should win, like even regardless of the odds, regardless of anything else, the prior statistical probability of them winning is more important.
I think an analogy that kind of bringing it back to DFS is that, especially with NBA, I think this is stronger with NBA than with some other sports. Even the guys who are priced up with our plus minus metric, we still have adjustments for salary. Even those guys who are priced up still have higher plus minuses than you would expect them to, right? Yeah. It's just this situation where even if you know what's going to happen, like there's always the possibility for like drastic outperformance in the NBA.
Yeah, it's very, very interesting. For sure. All right, so I guess we'll wrap it up there. To get very practical at the end here, Matt, if someone wants to study economics, study the stock market or the car market or inverted yield curves as a sort of a means to be better in their DFS process, do you have any recommendations? I mean, other than studying Warren Buffett and his many teachings, I mean, what do you suggest to our listeners, to our readers, other than reading your Labyrinthians, which of course we always encourage, how do you become a better DFS player by studying economics?
It's really interesting. So like I came into investing kind of through the side door. It was just something that I got into when I was in grad school doing a PhD in English, like had nothing to do with, like investing. And I just started reading a lot of different investing books. And so one of the great kind of like Hall of Famer investors out there is a guy named Joel Greenblatt, who teaches at the Wharton School at UPenn. Really any book by him would be one worth reading. Just kind of like very practical. I think for like a number of years, he averaged like on a per year basis, like a 50% gain. And even if you adjust that for the era during like the 90s when lots of people were making unreal money, like he was still like at another level. So Joel Greenblatt, and then also a guy named Peter Lynch, who ran the Magellan Fund and went to BC, Boston College, and like now the School of Education at Boston College is like named after him. He's another guy who's written some books. They're older now, but they're still very good.
Matt, I can't believe I had either you or Bales on a podcast and you didn't bring up Taleb. What's going on here?
Well, that's a good point. So the thing is, he's more of a philosopher at this point. Sure. And like, I think if you wanted to know about like trading or about economics, you wouldn't read, Fooled by Randomness or Black Swan. Like you would read like his first book, which is like a technical guide to trading. You know what I mean? But like, that's not the reason why he's known. No one really reads that book except people who actually are like Wall Street traders, like trading options, currencies, things like that.
Fair enough. Okay. Well, he's still a very good author and a guy that I think you mentioned in every single article that you write.
Yeah. It's if we were to take like odds on like Bayesian priors, the odds would always be that I would mention him in an article.
Yeah. And yourself.
Well, of course.
Of course. Yeah. This is my favorite thing. Yeah.
If I don't mention myself, who's going to?
Who's going to? Exactly. All right, Freeman. Thanks for joining us on this podcast, and everyone. Thanks for listening. We'll definitely keep on doing these every week with different subjects. We had Pete last week on the Millionaire Maker. This week's on the economics, and we'll have next week is going to be a mystery, but it's going to be a good one. And thanks for listening. Thanks for watching. If you're doing that, good luck in all your DFS contests, and join us next week as we talk about a new and exciting subject on the FantasyLabs podcast.